Okay, so let's get right into it. Welcome back to the deep dive. Today we are looking at a topic that, on paper at least, sounds a little dry. Insulation and roofing.
Right. Not exactly the most glamorous dinner table conversation.
No, definitely not. But frankly, the earnings report we are unpacking today is basically a masterclass in how to navigate a perfect storm.
And I mean that literally and figuratively.
Yeah, it really is.
We're talking about Owens Corning. Their Q4 2025 earnings report dropped on February 25th, 2026, and the immediate reaction was just, well, the stock slipped. Revenue missed expectations. If you were just glancing at the financial news, you'd think it was a pretty bad quarter.
Which is, exactly what a lot of the market did initially.
Yeah.
But that's exactly why we do these deep dives for you. We don't just stop at the headlines.
Exactly. Our mission today is to figure out how a massive legacy manufacturer manages to keep their profit margins incredibly high, even when their sales volume just falls off a cliff. And what actually happens when the weather itself stops cooperating with your entire business model. Because that's the core of the Owens Corning story right now. We've got the Q4 earnings report, the transcript from the conference call, and their slide deck. And pulling all that together gives a very different picture than just a missed revenue target.
Okay, so let's start right there with those headline numbers. The so-called miss. It looked pretty ugly at first glance, didn't it?
Oh, objectively, yes. The fourth quarter was rough. Revenue came in at $2.14 billion.
Right.
Which is down 17% year over year. That is a huge chunk of sales to just vanish for a company this size.
Right.
And earnings per share came in at $1.10, which missed the consensus estimate of $1.36.
So it's a double miss. Revenue is down almost a fifth. Earnings are down. Why wasn't there a total panic on Wall Street?
Well, you really have to zoom out to the full year of 2025. Despite that really nasty fourth quarter, their full year revenue actually went up 3%.
Oh, wow.
Yeah, they hit $10.1 billion for the year. But the real showstopper, the number that proves how resilient this company is right now, is their margin.
The adjusted EBITDA margin, right.
Exactly. For the full year, it was 22%.
And just to give you some context on that, 22% in something like software is pretty normal. But in heavy manufacturing,
It's almost unheard of. Think about the massive factories, the raw materials, the logistics networks. Usually, if your sales volume drops by 17% in a quarter, your margins get completely wiped out because you still have to pay for the factories to sit there.
you're still paying the light bill, basically.
Right. It's called operating leverage. But they managed to keep 22 cents of profit on every dollar they brought in. They're essentially squeezing more juice out of a much smaller lemon.
So let's talk about why the lemon got so small in the first place. The roofing segment, this is their cash cow. And revenue there dropped 27% in Q4. I mean, did people just stop buying roofs?
They literally did. And it all comes down to the weather. We saw this in the transcript, and it's a fascinating anomaly.
Yeah, the no storm phenomenon.
Exactly. For the first time in a decade, there were no major storms making landfall in the U.S. during the second half of 2025.
Which sounds great for homeowners, but for Owens Corning, a hurricane is basically a massive sales event.
It drives what they call non-discretionary demand. If your kitchen looks dated, you can put off remodeling it. That's discretionary.
Right.
But if a windstorm rips half the shingles off your house, you aren't saving up for a new roof. You're buying one right now, usually with an insurance check. No storms means homeowners don't call roofers.
But wait, even if the homeowners aren't buying roofs in October or November, don't the distributors, the middlemen, don't they still buy shingles to stock up for the spring?
Normally, yes, but we saw a massive destocking effect here. Distributors are cautious. They looked at the weather, saw that contractors weren't buying, and realized their warehouses were already full.
So they just stopped ordering entirely.
Exactly. They drained their own inventory to free up cash. So Owens Corning takes the double hit. The homeowner isn't buying, and the distributor has stopped ordering to clear out their own backlog.
And to make matters worse, early 2026 didn't bring a bunch of roofing demand either because of the weather again, right?
Yeah, the weather double whammy. Severe winter weather and deep freezing temperatures hit the South early in 2026. Even if you needed a roof, contractors physically couldn't get up on the ice to install it.
So demand is completely frozen. Literally.
Literally frozen.
But despite all of that, no storms, frozen roofs, Owens Corning went ahead and announced a price increase for April 1st, 2026. How does that make any sense? You'd think they would drop prices to get people to buy.
It's a huge flex of their pricing power. They are betting that the demand isn't gone, it's just delayed. roofs don't fix themselves. When spring hits and the weather normalizes, all those distributors with empty warehouses are going to panic buy.
And Owens Corning wants to capture that margin when they do.
Exactly. They are drawing a line in the sand.
Okay, so roofing is waiting for the weather to turn. Let's shift gears to the segment that sounds a bit more problematic. The doors business.
Ah, the doors. Masonite.
Right, the Masonite acquisition. They took a $1.1 billion write-down in the second half of 2025. And anytime you see the words billion and impairment in an earnings report, it's usually a red flag.
Yeah. A non-cash goodwill impairment charge is basically corporate speak for we admit the business we bought isn't worth as much on paper as we originally thought.
Because they bought it thinking the housing market was going to boom.
Exactly. But high interest rates and very low housing starts absolutely crush the market for new doors. If people aren't building houses, they aren't buying front doors.
So they took a massive accounting hit.
Yeah.
But is there a silver lining there? Or is it just a bad deal?
It's definitely a fixer-upper situation right now. Management is actually using this downtime to aggressively cut costs. They had a synergy target of $125 million.
Synergies being the corporate word for cost cutting, right?
Yes, merging logistics, cutting redundancies, and they actually exceeded that target.
Oh, wow.
Plus, they're selling off non-core parts. They sold a distribution business back to a customer. They are dumping a components facility in Oregon.
So they are tightening the bolts while the market is bad. So when interest rates drop and people start building houses again, that division is lean and highly profitable.
That's the exact playbook.
Which really ties into their whole operational strategy across the board. You can't maintain a 22% margin without some serious discipline. And the word that kept popping up in the call was curtailment.
Yes, curtailment. It's an aggressive tactic. It basically means deliberately shutting down your factories so you don't make products that are just going to sit in a warehouse.
But doesn't that cost them money? If you shut down a giant insulation plant, you still have to pay property taxes, you still have a skeleton crew, but now you have zero product to sell to cover those costs.
It costs a lot of money in the short term. They projected that curtailment is going to hit the roofing segment for about $30 million in Q1 of 2026 alone.
Just to not make stuff.
Just to not make stuff. But you have to look at the alternative. If they kept running those lines, they would be burning cash to stockpile inventory no one is buying right now. It prevents a cash flow disaster later.
And they had two different ways of doing this, right? Hot idling and cold idling. Can you break that down for us?
Sure. So in insulation, you have these massive glass furnaces. You can't just flip a switch to turn them off. If the glass cools, it hardens and destroys the furnace.
Oh, wow. So you have to keep it hot.
Right. That's hot idling. You keep the furnace burning, you burn the fuel, but you don't produce any actual fiberglass. You do that if you think you'll need to restart in a few days or weeks.
And cold idling.
Cold idling is the extreme measure. You safely drain and completely shut down the furnace. They actually did this at their plant in Nephi, Utah.
Which means they don't expect demand in that region to bounce back anytime soon.
Exactly. Restarting a cold furnace takes weeks and millions of dollars. It's a very clear signal that they are perfectly willing to take short-term pain to keep the overall business disciplined.
That discipline really seems to be reshaping the entire identity of the company. Looking at their recent moves, it feels like we are looking at a completely different Owens Corning than maybe 5 or 10 years ago.
They are definitely in the middle of a strategic transformation. They are pivoting heavily toward residential building products.
Which explains the divestitures. They sold off their building materials businesses in China and Korea.
Yep. And they are in the process of selling their glass reinforcements business, which is the industrial side stuff for wind energy and heavy infrastructure.
They just want to be a pure play residential company.
That's the goal. Residential now accounts for over 50% of their revenue. They are shedding all the cyclical industrial baggage to focus purely on housing.
And their marketing approach for that is really interesting, especially the Pink Advantage program.
The Pig Panther is still working hard for them. Seriously. But they aren't just advertising to you and me. They are aggressively targeting the supply chain, specifically small, family-owned lumber dealers. I saw enrollments in that program grew 38% in 2025.
It's a brilliant ground game. They aren't just relying on the massive big box stores. By locking in these small, local dealers, they are creating fierce loyalty.
Right, because if the local lumberyard owner pushes Owens Corning products to the contractors, that creates guaranteed pull-through demand.
Exactly. They are essentially building a grassroots sales force that will be primed and ready the second the housing market thaws.
Speaking of thawing, let's look at the crystal ball. What does the rest of 2026 look like for them? Because Q1 sounds pretty bleak.
Management is being very realistic about Q1. They expect revenue to be around $2.2 billion.
So basically flat compared to that weak fourth quarter.
Yes, there's no storm carryover to keep crews busy, and the winter freezes delayed the start of the season. It's going to be a slow start.
But they expect a turnaround. They do. They are calling for the second half of 2026 to improve significantly. They expect housing starts to stabilize, and statistically speaking, they expect storm activity to return to historical averages.
Let's talk about some of the non-weather headwinds, too.
Mhm.
Tariffs. I know that was a big topic.
It's huge. They faced $110 million in gross tariff exposure in 2025.
$110 million.
Yeah, but here's where their operational chops really show. They managed to mitigate that down to just a net $30 million impact
How do you just erase $80 million in tariffs?
by aggressively optimizing their supply chain.
Yeah.
Sourcing from different countries, shifting where they manufacture certain components. They are constantly adjusting to dodge those fees, and they are closely watching a recent Supreme Court decision that could shift the whole tariff landscape again.
It's like playing three-dimensional chess with global trade.
It really is.
And you can't play that kind of chess without some serious computing power. I noticed they even brought up AI in the earnings call, which I feel like every company has to mention AI right now.
It's practically a legal requirement at this point.
Right. But their use case actually made sense. It wasn't just a buzzword.
No, they are using what they call supply chain optimization agents.
Okay, what does that actually mean for a roofing and insulation company?
Think back to the curtailment discussion, deciding whether to hot idle a plant in Ohio or cold idle a plant in Utah, while calculating the shipping costs from Texas to cover the missing inventory, while factoring in tariffs.
That's way too much math for a human on a spreadsheet.
Exactly. These AI agents run those massive optimization scenarios to figure out the absolute cheapest, most efficient way to run the network on any given day.
Wow. Okay, so pulling all of this together, let's summarize the narrative for you. Owens Corning is clearly a company in deep transition. They are slimming down, getting rid of their international industrial businesses, and betting everything on the U.S. residential market. They survived a completely stormless year by being ruthlessly disciplined with their factories, literally shutting down furnaces to protect their cash flow. And now they're just sitting in a very chilly first quarter, waiting for the housing market to wake up.
They've basically built an incredibly efficient, highly profitable machine, and now they're just waiting for the weather to provide the fuel.
Which brings up a really interesting point to leave you with today. The entire recovery model for Owens Corning relies on normalized storm activity returning.
Right, reverting to the 10-year average.
But the question is, in an era of undeniable climate change, is relying on predictable weather patterns a safe bet for a multi-billion-dollar business anymore?
That's the real wild card.
Yeah.
They had 0 major storms in late 2025, followed immediately by severe unseasonal freezes in the south in early 2026. If extreme volatility is the new normal, then historical averages are useless. They can engineer the most efficient factories in the world, they can hedge against tariffs, they can use AI to manage inventory, but they cannot engineer their way out of unpredictable weather.
Is weather volatility the new permanent risk factor that you just have to live with? It's definitely something to chew on the next time you look at the forecast.
Absolutely.
Well, that wraps up our deep dive into the resilient, somewhat weather-dependent world of Owens Corning. Thanks for joining us, and we'll catch you on the next one.